South Carolina lawmakers are looking at cutting income taxes for taxpayers in the state.
Right now, the state has the highest rate when you compare it to other southeastern states. Our Jason Raven tells us what lawmakers are considering.
Well, the proposal a panel of lawmakers are looking at would reduce the individual income tax rate from 7% down to 6% over a 5-year period here in South Carolina. Well, the governor has been advocating for these cuts since he was elected back in 2018. Now, the state's top income tax rate would go down by 0.2% for 5 years under this bill. Now, according to the South Carolina Revenue and Fiscal Affairs Office, the state's marginal income tax rate is higher than Georgia's and North Carolina's. The effective tax rate, what amount of taxes actually paid, is lower between the three states. Executive Director Frank Rainwater says 44% of South Carolinians don't pay any state income taxes at all due to deductions and exemptions.
A lot of people describe it as an optics problem. I mean, I see those reports on the websites where they say don't move to South Carolina because it's 7%. That's not telling you the whole story. When you look at the overall burden relative to other states, our overall burden is low.
Now, Rainwater told lawmakers they don't have an estimate for exactly how much the average taxpayer would save, just because there are so many variables to consider for each individual taxpayer.
In a big picture, that's the algebra problem we have. And as you affect either the definition of income or the tax rate, you're affecting different taxpayers differently.
Now, his office does estimate the state would lose about $800 million in revenue once the 1% reduction is complete by 2027. South Carolina currently has billions of dollars in federal relief money and budget surplus, and lawmakers could use that to help cover some of these cuts.
We know these are some complex matters. We've been working on this. We're committed to it. So we definitely want to come back and make sure we take the time that we need to get this well-measured approach.
Now, under the bill, the yearly decreases would only be able to happen if state revenue grows by more than 5% in that year. In Columbia, Jason Raven, 7 News.
And state lawmakers are also considering a bill that would waive state income taxes on military pensions.